Hey everybody, welcome to the channel. If you're new here, thanks for stopping by, and yeah, hit that subscribe button because I don't post super often, but when I do, it's stuff that's been weighing on me, you know? And today, man, I really want to talk about something that's got me fired up and a little concerned at the same time. It's why I think silver is going to explode higher, like really take off in a big way. And it's all connected to this warning about an oil crisis that's unfolding right now and the real risk of a massive market crash coming down the line. Look, I know that sounds heavy, but stick with me because we're going to unpack it step by step in a way that makes sense, even if you're not some Wall Street expert. We're talking real-world stuff here that could affect your savings, your investments, your grocery bill, everything. And the good news is, there are things you can do to come out okay on the other side, maybe even better. So right now, the situation with the war in Iran is creating some serious ripples that aren't going away anytime soon. The damage to the infrastructure over there, it's not like a quick fix. We're talking 3 to 5 years before a lot of it gets repaired properly. That means the world's going to be dealing with less oil supply for quite a while. And that's a big deal because, think about it, GDP, the overall size of economies around the globe, it basically tracks how much energy we're consuming. When energy gets tight, everything slows down. And with this sudden drop in available oil, we're looking at shortages that are going to push prices up permanently, or at least for the foreseeable future. It's not just a blip. This is the kind of thing that changes the game. And let me tell you, that higher energy cost is like the pin that's about to pop some of these massive bubbles we've been sitting in for years. I really believe we're heading toward one of the biggest crashes in history if things play out the way they look right now. But don't tune out yet, because understanding this is the first step to getting prepared. Let me paint a picture for you on why the oil side is so critical. A huge portion of the world's oil, about a third of it, has to flow through this narrow passage called the Straits of Hormuz. Well, with everything that's happened, the traffic there just dropped off a cliff. Ships aren't moving like they used to, and that supply chain got interrupted for over a month already. You can't just snap your fingers and make up for that lost capacity somewhere else. It's not coming back overnight. On top of that, the war caused direct damage to production facilities. So even once things calm down a bit, the output is going to be lower for years. And here's where it gets connected to everyday life, A third of the world's fertilizer also ships through that same strait. Fertilizer, that's what farmers use to grow the food we all eat. When that supply gets shut off or slowed way down, especially right as planting season hits, it creates this ripple effect that's scary. Prices for fertilizer have already almost doubled in a short time, and that's from data that was a few weeks old when I first looked at it. Imagine what it's doing now. Poorer countries in places like Africa, they might get priced out entirely, leading to crop failures and even famine risks. Even in wealthier spots like Europe, officials are already talking about possible food rationing because of this. It's not doom and gloom for the sake of it, it's just what the numbers are showing. And energy, it's baked into absolutely everything. You think about food getting to your table, not just growing it, but transporting it, processing it. All that takes fuel. Herbicides, pesticides, the machines that plant and harvest, the power plants running on petroleum derivatives. It all adds up with this multiplier effect. Gasoline prices have spiked hard, wholesale jumping from around $1.80 to over $3.50 in no time. That's a huge percentage increase really fast, and nobody has time to adjust their budgets or their businesses to that kind of shock. Energy leads, and food prices follow. They've tracked each other for years, going back to 2007 and before. So when oil jumps, expect groceries to catch up soon. This isn't temporary either, because of the infrastructure damage, including stuff in shared fields with neighbours like Qatar. The largest natural gas field there got hit, and fixing that could take another 3 to 5 years. Natural gas is key for a lot of fertilizer production too. So yeah, higher prices on energy look permanent from here, and that puts pressure on the whole global economy. Now, the thing that really worries me and why I see silver exploding as a result is that all this is happening while we're already in some extreme bubbles. Markets have been inflated for a long time, way before this Iran situation kicked off. And now we've got this perfect storm acting as the trigger. Let me explain what I mean by bubbles in simple terms, because I want you to follow along even if finance isn't your daily thing. There's this measure called the Buffett Indicator, named after the famous investor Warren Buffett. Basically, it looks at the total value of all the publicly listed stocks compared to the size of the whole economy, the GDP. Normally, over a long history, that ratio hovers around 50 to 60%. But right now, it's sitting at over 230%. That's not normal. That's crazy territory. And if you look back, this bubble century we've been in since the late 90s has pushed averages way higher than they ever were before. People who only started investing recently might think it's just how things are. But no, this is uncharted and dangerous. Another way to see it is through PE ratios, price to earnings. That's how much you're paying for a stock relative to what the company actually earns. Historically, the average was around 14 or 15. Now we're seeing 30, 40, 50, and for some tech names, even 100 or more, or infinite if they're not profitable yet. It's like investors are paying insane multiples because money's been so cheap for so long. Compare that to past peaks. We're way above what led to the 1929 crash that started the Great Depression, higher than the dot-com bubble in 2000, and beyond the real estate run-up before 2008. Real estate itself is in a bubble too, with prices detached from fundamentals in a lot of places. And banks? They're in rough shape. The bonds on their balance sheets have them upside down, meaning the value of what they hold has dropped hard. Delinquencies on commercial mortgages are higher than after 2008. People are Googling things like, "can't sell my house," at record levels. Private credit defaults are at all-time highs. Debt to GDP in the US is the highest ever, even above post-World War II levels. This is all starting from a really shaky foundation. So when you layer on this energy shock, with oil prices jumping from the 60s or 70s up toward 140 in spots, before settling around 108 or so, and gasoline at the pump feeling it immediately, it's like the pin popping the balloon. Every time energy prices have surged this fast historically, it triggered a recession. But this time, because the bubbles are so much bigger, a recession could turn into something much worse, like a full-blown depression-style crash. The stock market could correct massively. Real estate values might drop, even as new construction costs soar 30% or more because of higher material and energy prices. Tenants in apartments could struggle with higher rents when their fuel and food bills eat up their budgets, forcing them to rethink where they live. Builders and businesses get squeezed. It's a chain reaction. And remember, GDP tracks energy, so less affordable energy means slower growth, maybe contraction, and that hits corporate earnings, which pops those high PE ratios right back to earth. But here's the part where silver comes in, and why I think it's going to explode in this environment. You see, when bubbles pop and currencies get pressured, people turn to real assets that hold value. Fiat money, the dollars we use every day, it's not really designed to store value over time. The way it's created, the math guarantees it loses purchasing power. That's why throughout history, gold and silver have been the true money that lasts, acting as a medium of exchange, a unit of account, and most importantly, a store of value. Aristotle figured that out centuries ago. Silver, especially with its industrial uses plus its monetary role, tends to move even more dramatically in these kinds of crises. In past periods of uncertainty, precious metals have been the best performing assets, outperforming stocks and real estate during the resets. Look back, and they've shone when everything else wobbles. I'm not saying it's overnight, but with shortages driving inflation in energy and food, and central banks likely responding by printing more to ease the pain, that devalues the currency further, which boosts demand for silver as a hedge. And think about resilience here. No matter what happens, you want to be in a position where you can weather the storm and maybe even come out ahead. That's why preparation matters. It's better to be ready and not need it than need it and not be ready, right? Like the old Scout motto. Investors who see this coming and shift into things like silver can protect themselves. I've been preparing for scenarios like this for years now, focusing on real assets and setups that provide some independence. But you don't have to do anything extreme. Just understanding the risks and having a portion in precious metals can make a huge difference when the crash hits and the recovery favors hard assets. Look, rough waters could be ahead economically, but for folks who prepare, it can be clear sailing and a bright future. The real estate guys and people taking action on these ideas are the ones who win when opportunities arise from chaos. We're not leaving you hanging with just the warnings. The key is resilience. Get informed, diversify into real value like silver, and position yourself to bounce back no matter what. If you're watching from the US or Europe or anywhere, the lag might differ, but the trends are global. Farmers everywhere are feeling the fertilizer pinch already, with many saying they can't afford it at these prices, which means higher food costs or shortages down the road. Energy spikes hit everyone from the pump to the power bill to the store shelves. Bubbles this big don't deflate gently, they burst. But silver has a way of shining in exactly these moments, historically speaking. Let me circle back a bit on those bubbles so it really sinks in. The Buffett Indicator, showing stocks worth over twice the economy? That's not sustainable. PE ratios triple or quadruple the long-term average. Investors paying crazy prices, assuming endless growth, but energy constraints say otherwise. Real estate down in places like China by 25% already, and that's before a global convulsion. Banks holding underwater assets, commercial delinquencies climbing, debt loads at extremes. It's all interconnected. The war just accelerated what was coming. Oil from various regions, whether West Texas or Russian or OPEC baskets, all spiking because supply routes got disrupted. No quick workaround. And that feeds into higher costs across the board, popping the illusion of endless cheap growth. When crises hit, credit tightens even if rates drop. Banks get scared, balance sheets wrecked, loans dry up. Mortgages might look cheap on paper, but good luck qualifying. We've seen it before. So pre-existing properties might hold value better than new builds that cost way more to construct now. But tenants feeling the squeeze from gas and groceries could mean higher vacancies or rent pressure. It's a balancing act. The point is, this energy-driven disruption is the catalyst for the unwind. And in that unwind, silver stands out because it's scarce, useful, and proven as money when fiat falters. It's not just theory, it's how markets have behaved in past energy shocks and bubble bursts. I could go on about the charts and data, but I want to keep it straightforward so anyone can follow. The traffic through those straits fell sharply. Oil barrels lost, fertilizer exports halted, prices doubling fast. Energy charts showing the correlation to food, all pointing to shortages that central banks can't fix with more printing. In fact, that makes inflation worse, boosting metals. The doomsday clock got moved closer to midnight even before this latest flare-up, signaling global risks. But again, preparation beats panic. I've got my own setup for resilience, and it includes holding real assets that thrive when paper ones don't. So to wrap this up without leaving you hanging, the oil crisis from the Iran situation is real and lasting, creating energy and food pressures that are going to expose and explode these historic market bubbles. The result? A potential crash bigger than anything we've seen, but also a massive opportunity for silver to surge as people seek safety and value in something tangible. Get informed, think about resilience, maybe start small with some precious metals if it fits your situation, and focus on what you can control. Thanks for watching all the way through. If this resonated, like the video, subscribe and comment your thoughts below. I read them. Stay prepared, friends, and I'll catch you in the next one. Take care.